Welcome to the Riskwiser Zone, the show where we dive into the world of finance and explore the latest trends and insights that shape the markets. I'm your host, Lewis, and today we're starting with a fascinating story about the precious metals market. We've seen a significant surge in prices for both gold and silver recently, driven by a combination of factors including geopolitical tensions, a weakening dollar, and strong investment demand. But what's caught our attention is the gold-silver ratio, which has dropped to its lowest level since 2011, indicating that silver might be overbought relative to gold. According to analysts, this ratio suggests that silver prices may be due for a correction, with some predicting a potential pullback of 10 to 12 per ounce. This doesn't necessarily mean that the trend is reversing, but rather that investors should exercise caution and consider adjusting their allocations. Gold, on the other hand, appears to be a safer bet at this juncture, with its lower beta and stronger defensive characteristics making it more attractive to investors seeking to hedge against uncertainty and volatility. However, it's essential to remember that both gold and silver have their own unique drivers and fundamentals, and investors should carefully consider their individual circumstances before making any decisions. As we navigate this complex landscape, it's crucial to stay informed and adapt to changing market conditions. We'll continue to monitor the precious metals market and provide you with timely updates and insights to help you make more informed investment decisions. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of mining and finance, where a significant development has caught our attention. Osisko Development has announced the completion of the sale of its San Antonio gold project. This move is expected to have a notable impact on the company's financials and overall strategy. Let's break it down. The sale includes a combination of cash and share consideration, with potential deferred payments tied to specific conditions. The total value of the deal could be substantial, depending on the performance of the shares and the fulfillment of these conditions. It's essential for investors to understand the terms and potential outcomes of this transaction. Osisko Development's management has expressed optimism about the sale, highlighting its alignment with the company's goals and strategy. However, as with any business decision, there are risks and uncertainties involved. The company has cautioned that the deferred payments are subject to certain conditions and may not materialize as expected. We'll be keeping a close eye on how this development unfolds and its implications for Osisko Development and the broader mining sector. It's crucial for stakeholders to remain informed and adapt to changing circumstances in this dynamic industry. Welcome back to the Riskwiser Zone. As we wrap up today's show, I'd like to take a closer look at some intriguing developments from around the world that may have implications for investors and risk managers alike. First off, let's head over to Japan, where local governments are exploring innovative solutions to address the challenges posed by depopulation. By tapping into worker cooperatives, these municipalities aim to provide essential services in areas where traditional businesses might struggle to survive. It's a fascinating example of community-driven problem-solving and could potentially inspire similar initiatives elsewhere. Meanwhile, in the world of finance, Nomura's revival is facing a new challenge from Japan's ambitious megabanks. As the economic cycle continues to influence profit rebound, it's essential for investors to remain vigilant and not get caught up in complacency. After all, as we've seen time and again, tailwinds can quickly turn into headwinds. In the realm of technology, SoftBank is reportedly in talks to invest a whopping $30 billion more in OpenAI, the creator of ChatGPT. This significant commitment underscores the company's ambitions to play a central role in shaping the future of artificial intelligence. As AI continues to transform industries and revolutionize the way we live and work, investors would do well to keep a close eye on this space. Lastly, let's not forget about the ongoing geopolitical tensions that can have far-reaching consequences for global markets. The recent attacks in Ukraine have sent shockwaves into neighboring Moldova, leaving many feeling virtually defenseless. As investors, it's crucial to stay informed about these developments and be prepared for potential risks and opportunities that may arise. As we navigate this complex landscape, remember that risk management is key. By staying informed, diversifying your portfolio, and being cautious, you can better position yourself for success in these uncertain times. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.